Ladies and gentlemen, welcome back to the channel. We have lots of news to go over from China, US, trade relations. It seems like a little bit of a backpedaling in some of the positive talks that we've seen, although not any bad enough headlines to really destroy markets. Markets have largely recovered all of that Moody's downgrade sell-off that you had Friday in after hours. Now, with that, there's a lot of comments on this Moody downgrade. Even Mike Wilson, one of the, long time bears from Morgan Stanley, says to buy this dip, that this market is going higher. So take that as you will. We have a lot of Fed comments as well today, and I will share all of this with you throughout this video. Ladies and gentlemen, if this is your first time to the channel and you like markets and specifically like to make money and stay informed, hit that like button and subscribe to the channel. It's free 99 and we keep you up to date, like in real time, every single day. So first and foremost, Morgan Stanley's Mike Wilson says buy the dip after Moody's downgrade. Morgan Stanley's Michael Wilson sees the recent U.S. stock sell-off after Moody's credit downgrade as a buying opportunity, driven more by interest rate fears than fundamentals. He notes that Moody's is the last major agency to downgrade U.S. debt following moves that began back in 2011. Rising bond yields, especially if the 10-year tops 4.5%, could increase pressure on equities. And for anyone that does not know why that is, it's pretty simple. The higher the risk-free return is, the less incentivized you are to put money into equities. Like 2021, everyone was just buying everything in stocks. Okay, bad stocks, good stocks, terrible stocks, stocks that were going bankrupt, because you could only get like a half of 1% to 1% yield on bonds. You're not even keeping up with inflation at that point, right? So nowadays it's a lot different. There is another alternative. There used to be the saying called TINA, which is there is no other alternative besides stocks, essentially, but now there is, again, with bonds. Now, despite concerns, volatility eased after a surprise U.S.-China trade deal, which cut effective tariffs from 145% to 30%. However, further market gains depend on earnings growth. Without rate cuts, EPS growth must carry the rally past 6,100. If yields rise above 4.5%, Morgan Stanley expects a modest 5% valuation pullback, but would view that as a buying chance. They favor cyclical sectors like industrials and remain cautious on consumer discretionary and staples. Fed Bostic says today Moody's downgrade will cut across economics and financial markets. Again, I disagree with this because it was already expected to happen. We've been on a credit rating downgrade watch from Moody's for months. Like, we knew this was going to happen. And that's why bonds are not freaking out as bad as you would think today. He says the downgrade will have implications for the cost of capital, which could ripple through the economy. Bostic says we'll have to wait and see about the impact of the downgrade on demand for U.S. debt. Bostic says it is unclear if consumers today can take on the full cost of tariffs given the state of household balance sheets and recent inflation. Translation, y'all are broke. That's pretty much it. Consumers are not going to eat the cost of inflation. So who does? Today, the White House says that Chinese producers are going to eat the cost of these tariffs, which not exactly sure how that works, given U.S. companies pay the tariff. Walmart says that they will brunt some of the tariff burden. But I mean, I don't think you can pass on costs to consumers. Consumers are broke. Ed Bostic says we have to wait 3 to 6 months to see how uncertainty settles. Bostic says the number of rate cuts this year depends on how things turn out. The details of the tariffs will matter. So that's kind of interesting. Fed Bostic says that we're still going to get rate cuts this year. We just don't know how many. He says he's leaning more towards only one cut this year because it will take time to understand tariffs. He says if the tariff transition is longer, it may impact consumer behavior. Let's be honest, I don't think any average consumer really cares about tariffs. Like, nobody's watching the news to see what the tariff rate is going to be tomorrow or next week or next month. Bostic says inflation is not moving to target as fast as anticipated, which is interesting because we just had the lowest inflation reading throughout the cycle. Like, inflation is virtually at target right now. Bostic says inflation expectations are moving in a troubling way. Again, he's referencing the UMich survey, which is very political. Again, just shows kind of how incompetent some Fed officials tend to be. And he says, I worry a lot about the inflation side of our mandate. Fed Bostic says, I am not hearing that large layoffs are imminent. And this is the solid core of my bull thesis on markets. Why I think the S&P can go up another 20% over the next 6 months into year end of this year. 20%. That's 700 on the SPY. Because if people have jobs, they will continue to spend. I don't think there's a single event that would cause people to start saving money. Like, if it wasn't COVID, if it wasn't a great financial crisis, like there's nothing that's going to happen that's going to stop consumers from spending all of their money. Consumers in America for the foreseeable future will spend all of the money that they make in aggregate. Obviously, some people, save and invest like you probably do. People will continue to spend all their money as long as they are employed. As long as we don't get large layoffs or a layoff cycle, it's hard to be bearish on this market. That's the bottom line. And until that happens, I can't be bearish on this market unless like US-China trade talks completely fall through, which is clearly a possibility. Bostic says the market volatility in April did not feel that close to a significant financial event, which is crazy. And he says that tariffs on China are still economically significant, which again, part of the reason why I think we get a 20% rally into year end is because now we're all fixated on this 30% number. I think China is going to make progress on fentanyl and start cracking down on fentanyl production in the country. And as they do that, I think the 20% fentanyl tariff will be paused. So I think at the end of this, you're looking at the 10% baseline tariff. And that is 60% lower, or will be 60% lower than where tariffs are currently at. And that's going to be great news. Barclays says that U.S. growth will slow, but recession is unlikely. Barclays expects U.S. economic growth to slow in the coming quarters, but no longer forecasts a recession in the second half of 2025, thanks to easing U.S.-China trade tensions. Tariffs have dropped to around 14%, 17% excluding a temporary electronics exemption, reducing inflationary pressure. Barclays now sees core PC inflation at 3.3% in Q4 2025, down from 3.8% and 2.2% by the end of 2026. With a stronger outlook, unemployment is expected to peak at just 4.3% in late 2025. As a result, the Fed is now seen making only one rate cut this year, likely in December. In Europe, Barclays' new base case for stocks 600 is 540. Who cares? I agree with this. Besides the inflation aspect, I don't think we're going to get this inflation that people are talking about. JP Morgan's CFO Jeremy Barnum says there is significant economic uncertainty. China's foreign minister, in a phone call with his German counterpart, says that China and Germany should prevent the undermining of normal bilateral cooperation in the name of so-called de-risking. Bloomberg Intelligence says that, quote, investors have made a killing by following Trump's explicit advice this year to buy stocks. The US-Japan trade agreement framework is being delayed in part over negotiations over so-called burden sharing, or how much money Japan has to kick in to support US military in Japan, also known as protection from Chinese aggression. White House senior advisor Hassett says that Moody's decision is backwards looking, which again is something that I've already pointed out. He says that U.S. debt is the safest bet on earth. And Speaker Mike Johnson will hold a member-wide briefing call at 10:45 a.m. this morning to walk through megabill changes and leadership's plan to push through the massive legislation by Thursday. And Hassett says, I would not be surprised if there are more trade deals this week. Hassett says, we'll keep a close eye on what the Chinese have agreed to, which again, we don't have all the details of this, but I do think part of it has to do with cracking down on fentanyl. And White House senior advisor Hassett says the economy will continue to take off. And Hassett says that Moody's downgrade should not be a surprise to markets, again, which is what I said on Friday and on Saturday. Hassett says that 15 countries are close to a trade deal. Fed Williams says the economy is likely to slow this year. JD Vance says if Russia is not willing to engage, eventually the US has to say this is not our war. Fed Williams says today it's going to take some time to get a good read on the economy. Fed Williams says it will take some time beyond June and July for a clearer outlook, which is basically saying he doesn't think we're going to cut rates in June or July. Now, China issues a statement on U.S. adjusting chip export controls. China says that the U.S. is undermining the consensus reached in Geneva talks, which this headline does not sound good. White House Press Secretary Leavitt says every Republican in House and Senate must unite behind this reconciliation bill. Now, China is asking the U.S. to correct the wrongdoings, and China vows to take measures if the U.S. insists on going its own way. China Commerce Ministry on U.S. statement on Huawei chips says, quote, we urge the U.S. to stop discriminating against or actions towards China. And he says that China will take firm steps to protect rights if the U.S. insists on damaging Chinese interests. White House press secretary says that Trump will speak with Putin at 10 a.m. today, and there will be a readout following that conversation. Leavitt says that Chinese producers will be absorbing the cost of tariffs, which is, kind of delusional or questionable. The U.S. leading index month over month today came in at negative 1%. The forecast was negative 0.9%. Previous month was negative 0.7%. Jamie Dimon says he wouldn't take stagflation for the U.S. economy off the table. Jamie Dimon said even lowered tariff rates are pretty extreme. He says he does believe in American exceptionalism. He says he is a patriot, but he still thinks American asset prices are kind of high. As far as the percent of stocks trading above their 50-day moving average, that's currently at 69.5%, which is on the high side of where we normally are, like during rallies, but not overstretched too much by any means. You could continue to go higher. I have been expecting a little bit of a speed bump, a slowdown, a consolidation, if you will, in our markets. Don't be surprised if we get that, especially this week with not as much economic data, not as many important earnings. If there was kind of a time for a little bit of a slowdown, it would be now. But as you can see, again, we kind of recovered that sell-off that we had Friday and after hours. So again, it's not a certainty that's going to happen. And you can also make a contrarian argument and say, you still have way more bears out there than bulls. Like, people are still way too bearish on this market. And when people are way too bearish on a market that's going higher, it tends to lead to a chase. That's also a fair argument. Last Thursday, on May 14th, you had 44.4% of investors that reported in this AI investor sentiment survey that asks one question: what direction do AAII members feel the stock market will be in the next 6 months? One question. Pretty simple survey. 44.4% said bearish or lower. 19.7% were essentially neutral or undecided, and 35.9% were bearish or bullish. I mean, historical average is 31% bear, 31.5% neutral, and 37.5% bullish. But, these days, recently, you've been in the high 30s, in the 40% range for bulls, and bears were normally in like the 25% range for the bear side. So you're definitely still way negatively skewed on the sentiment perspective. If you look at CNN's Fear and Greed Index, you're coming in today at 70. Market momentum, extreme fear. Stock price strength is greed. Stock price breadth, extreme greed. Put and call options is greed. Market volatility is neutral. Safe haven demand in extreme greed, and junk bond demand in extreme greed as well. Now, one thing we do have to pay attention to is bond yields following this downgrade. Okay, bond yields are at 4.48%. They were up a lot more today. They were up like 11 basis points. Now they're only up 5 basis points today. That's a good sign throughout the day that bond yields have actually been coming down. Above 4.5% is, I think, a pressure point on markets. Okay, you're only 2 basis points away from that. And keep in mind, like 80% of trading volume is algorithms, is computers. It's not even real people. So I'm sure there's a lot of programs that say 10-year treasury yields above 4.5%, kind of a danger zone. Sell equities. Okay, so over the next couple of days, if they continue to work higher, that would be something we would want to pay attention to. Now the VIX today is up about 5.5% to 18.21, still elevated. Again, just to kind of point out, people are bearish still. The VIX still elevated. Okay, it was at like 12 back in January, February-ish. Russell 2000 today down about 1%. NASDAQ down about 0.25%. S&P down about 0.1%. The Dow is actually up 0.16% as people are, choosing to go into more defensive names. Like Dollar General today continues to do well throughout some of this sideways trading action because people are now kind of deeming that as a little bit of a safety trade. So, ladies and gentlemen, that is all of the news you need to know. That is all of the events today. Again, little bit of a speed bump here before we continue to move higher and ultimately break new all-time highs is my expectation. So let me know your thoughts down below in the comment section. Have a great rest of your day, and I will see you in the next one.